What's up, Ape Nation? It's Marcel Klinovic, Boss Blunts. We're going to take about 5 to 10 minutes here before this video actually starts with the due diligence. I'm just checking the audio. Everything seemed to be all right. Some minor adjustments. I'm going to share this over on Twitter because we haven't gotten this out yet. We're going to start up in about 6 to 8 minutes. Good old SEC. Always up to something, huh? Excuse me one second, everybody. I'm sharing this on Twitter. Like I said, we're going to get started in about 5 minutes. Thank you, everybody, for coming. Appreciate you. Vulcan, Sauce, D-Wade, Pulsar, Mastermind. All you guys and gals, thank you very much. Brenda, Rennie, JW, I-19, thank you for showing up. We're going to get started again here in just a couple more minutes. Going to give people a little bit more of a chance to get in since I just started it. Now, I had to redo it 4 times because YouTube kept getting stuck. Every time I would launch, it would just completely black out on me or the camera would crash. But it was all browser issues through YouTube. What's up, D-Wade, Moises, Harris, Tom, Ty, JH, No Name, Dat Yell Ram, thank you guys for your support. Hung Wen, thank you for showing up. Appreciate y'all. Pop this off here on Twitter real quick. As you can see, sticking with the Cowboy Bebop theme because we are going to the goddamn moon. What's up, fam? Yeah, how's everybody doing? Thank you so much. James, Sean, Michael, Frosty, Void, Danny, Hugo, Eric. Thank you guys and gals. Appreciate y'all. Yeah, sorry again. I always do this so late. You know, I wasn't even going to do this video today, but I'm getting so many questions on Twitter. So many people are asking about the new about the 010 filing. I have to explain this before it gets out of control because you know how the hive mind works. As soon as something's like with the BDRs, they were supposedly debunked, but that's not the case. As I showed you in one of the last videos, BDRs are 100% synthetic shares that are supposed to be owned by, you know, Citi and BlackRock and all these guys, and they don't own what they're Deutsche Bank, X-Trackers. They don't own a fraction of what they're supposed to. Yeah, all right. Appreciate you, Nancy, David, Sean, Ty, Boozy, Grape. Thank you, everybody. If you're working or if you're staying up late, I appreciate you for being here. We're going to get started in just another minute. Obligatory blunt roll is happening at the moment. Got to roll one up right here. This is going to be a shorter video. This should be no more than 20 minutes. I might open it up for a Q&A session afterwards if you guys and girls want. But I'm going to try to keep this to under an hour because I seem to not know how to make a video that's under an hour or more. And I'm trying to get better at that. Check out our good friends at the SEC. What the fuck are they doing, huh? Look at that. Wow. Totally not the FBI. Rennie, Boozy, Debt, Pedro. Hey, you guys want to know why I don't have super chats turned on? Because I don't want your money. I'm not here to sell anything. I don't want you guys to give me any money. And if you did, I'd put it towards AMC and GameStop anyway. But that's besides the point. That's not what I'm here for. You know, I haven't monetized. I haven't enabled ads. If you're seeing any ads, they're from YouTube. They're not from me directly. So just thank you, everybody, for your support and for coming out. Again, this really is nothing about the money. It's all about explaining stuff to people that, just to regular people, because this is like, fuck, this might as well be in a different language with the way that they explain this sometimes, especially with the way that they like to write these things up. Eric says SEC is busy doing what they do best, watching porn. Yeah, they're probably too busy watching Pornhub right now than to be watching this. JW, thanks for coming out. I'm going to get started here with the quick. Just, all right, one more minute. You guys are going to love this shit. Who wants dates? Who likes dates? Because I got dates for you. Remember T plus 1, T plus 2, T plus 35? No, we've got T plus 231 now. This is the way that things are getting done over here with these total return swaps. T plus 231, guys. It's like that. These are futures contracts. It's going to send us to the goddamn moon. All right, just one more bit of setup here. Sorry. Usually I set this all up before I start the stream, but in this case, I just wanted to get it rolling. Literally and figuratively, rolling the blunt and get the stream rolling at the same time. All right, what's up, folks? Thanks for coming out. Appreciate you all. Ape Nation, you've been fantastic. Thank you for having me. Thank you for your support. And all those fucking shills on Reddit, go fuck yourselves. That's alright if Cryan thought it was a shit post. He can fuck right off too if that's the case. I don't understand someone like Cryan to be able to see something that's not so analytical. He's fantastic at certain things, analyzing things that are right in front of your face, but he's not the greatest at macroeconomics. And that's okay. I'm not saying I'm the greatest. That's not my intentions whatsoever. You got to either get smoking pot, 21st goddamn century, get with the times, or go fuck yourself. Thank you for the tweet about the Ortex data. Grape A, Boozy, Totally, JW, Elmo, Bob. Appreciate y'all. Let's get down to the business. All right, we're here right at what marker are we at now? I'm not sure. Almost the 9-minute mark. We're about to kick this thing off. Oh, JW said Cryan created what you are showing and said he was joking. I got to take a look at that. Because I actually believe that. I don't believe that he was joking because there are futures return swaps that come around from IMM. Okay? And if you guys are not aware of this, check this out. I'm going to hit this real quick before we go any further. And if anybody said this was a shit post, that's up to them to say that. But I personally know this to be a actual futures contract. And these IMM dates are the 4 quarterly dates of each year in which the Euro and the Forex futures contracts and options contracts meet and use their scheduled maturity date or termination date. The dates are the 3rd Wednesday of March, June, September, and December. And you don't have to be a genius to figure out that this month, September 15th, is a Wednesday. It is the third Wednesday of the month, and that is the maturity date and termination date for probably millions of these IMM, Euro, dollar, and Forex contracts. Initial maturity, International Monetary Market. Too many acronyms in the stock market to remember them all. So as you can see here, from the late 2002, right after the dot-com bubble, these, credit default swaps, they are contracts that they would all mature on one of the 4 days in March, June, September, and December. And they're used as termination dates for the contracts and as the dates for the quarterly premium payments. And this is a lot of where these futures rollovers tend to fall into play, because the futures rollovers theory extends through September 9th. But theoretically, we could see some later on. And happy birthday, Yoram. If this is on your birthday, you are going to get an amazing birthday present. So you could think this is fake. You could think this is real. This guy is a legitimate TD guy who I've been working with in the past on Reddit. I don't know him personally, but I've commented and discussed many things on his posts, and he has on my Reddit thesis as well, multiple theses. So this is somebody who I actually do take into consideration when they say something. BlackRock, I don't remember what I'm smoking on here, man. I don't even know what the hell this is. It's just some quality herb. So this is the IMM dates that you guys have to look forward to for September. Aside from, we know these futures contracts rollover dates extend from today, September 2nd, all the way through September 9th. There's also this September 15th maturity cutoff date for these credit default swaps. So this is something to keep in mind. Now, this doesn't mean we're going to moon. This doesn't mean we're going to even have a green day. I don't know what the 15th is going to look like. Nobody does. The fact is that these are important key dates that everyone should be aware of and prepared for in advance, regardless of whether something good, bad, or nothing at all happens, because you just never know what's going to happen. And if you're in this play in the stock market for the mother of all short squeezes, timing is of the essence. Anybody who says that dates don't matter doesn't fucking know what they're talking about, because dates do matter. They absolutely do, more than anything. Dates and timing is everything when you're getting in and out of the stock market, down to the millisecond. That's why these hedge funds like Citadel use fiber connections to get that split second jump over everybody else. Lee Marley asks, do we MOASS in September? I believe the mother of all short squeezes will begin in September and extend into October. It could be faster. It could take longer. That's just my estimate from what I've learned. And yeah, somebody said, don't be dumb and buy weeklies. Yeah, don't buy weekly options. If you're going to buy options contracts, go further out. If you want to buy something for next week, don't. Go further out. And that's not financial advice. You can do whatever the hell you want. If you want to buy lottery tickets for next week, your choice. But I personally find it to be a waste of money. And I think you're a lot safer not getting as much leverage, but securing or reducing your risk as much as possible, going out a couple of weeks further, or even a month or two further than you actually want to if you're trying to do weeklies. Because weeklies are just garbage. JW, thank you very much. If you got any more information about that Cryan post, you can pop it into the chat right there, please, so I can take a peep at it right now. Gunnar says, I don't think they want to drag this into next year, especially missing the capital gains tax. And I agree. I definitely don't think they want to drag this into next year, and they can't. And that's the reason that they've had to delay these filings. Look at what the Treasury's up to. Check this out. This is how much they started with at the beginning of this year. $1.78 trillion. And then earlier in this month, they had $355 billion left. I'm going to reduce this in size a little bit here. That was a September 1st opening balance, 355. The August one ended right around 260 billion. They had an influx of cash Okay, they increased their cash on August, the last day of August, which would be August 30th. Sorry, one second. August 31st. And then on September 1st, they actually had they spent over $69 billion. So they sold a ton of junk bonds and mortgage-backed securities. And when they did this, it gave them an influx of around $100 billion. $100 billion in one day by selling junk bonds and mortgage-backed securities. Mortgage-backed securities are bonds secured by home and other real estate loans, home mortgages, etc. They're created when a bunch of these loans are taken together and they're just moved around, and they call them tranches. And in these tranches, they put varying levels of risk together to try to mitigate the risk of the assets that have borrowers that have, shit credit or a high chance of defaulting on their loan and going bankrupt due to high percentage interest rate loans or balloon mortgages. So that pool's then sold to the federal government agency like Ginnie Mae. They're a government-sponsored enterprise, kind of like Fannie or Freddie. Well, Fannie or Freddie used to be, to a securities firm to be used as a collateral. So let that sink in. So they're selling the government's giving away their mortgage-backed securities. These are some of these extraordinary measures that Janet Yellen was telling us about, what she would have to implement. Right, and I know where you're going with this. Like, what does this have to do with the new filing? It actually has everything to do with the new filing, because this is looming on a government shutdown and a possible default. The government could default on our interest payments to other countries. That would be considered a default on our debt. And that would be the first time that that's ever happened in history. And a lot of people on Reddit and YouTube are saying, oh, that would never happen. They always increase it. They've never defaulted before. That's correct. The United States has never defaulted before, but they have had debt ceiling issues. They have had government shutdowns, both of which separately or together in the past have significantly contributed to massive market crashes in 2001, 2008, 2011, and 2013. And when a market crash occurs, it causes a loss of money in banks and hedge funds and regular retail investors such as you and I in our investment accounts. We trade mostly on cash. So you can only spend the amount of money. You got $100 in the bank in your investment account, in Fidelity or Interactive Brokers, whatever. You take your $100 and you buy something with it. That's all you get. And these guys that are trading on margin on these accounts, they might get 2 to 1 or 3 to 1. But these banks, because they have other assets, even though they're rehypothecated, they have ways of hiding their liabilities and rehypothecating, which means sharing with other banks, giving them a mixed bag of securities in exchange for another mixed bag of securities. That makes the books look clean at the end of the day. That's why at the end of every month, you will see massive jumps in the RRP, the repurchase and reverse repurchase program. Because if you don't have these jumps, they won't balance the books properly. So that's why we have had 17 days in a row in the month of, we had 17 days in a row now as of September 1st, yesterday, where the reverse repurchase program was utilizing and abusing over $1 trillion in bank funds that have been traded back and forth between banks and the Federal Reserve in exchange for 1 day repurchase agreements. They're just 1 day bonds because the banks have no interest in putting their money in the bond market for 3 months, because just a few months ago, or even in 2020, the bond market went entirely negative on the 3-month yield and went to negative 0.05%. So they were actually losing money for every day that that thing was sitting in there. And it didn't last very long because the government started printing money so quickly. But we're in a position now where the government can't print more money as quickly as they were back then because of the inflation that's been setting in. What happened today? What did I just do? What happened today, September 2nd, 2021? There was a notice of designation of longer period for commission action on a proposed rule change to establish the SFT clearing service and to make other changes. That's SR-NSCC-2021-010. So we extrapolate this document here, and it's pretty short. So I've read it over a dozen times here, and it seems pretty clear cut. I'll read it to you basically and clearly, skipping over the garbage. On July 22nd, the National Securities, NSCC, filed with the SEC a rule change, and that's 2021-010. And it's a proposal. Okay. It was published for comment, whatever, that doesn't matter. Now, a certain section of this provides that within 45 days of the publication of this notice, or within up to 90 days, if they find it to be appropriate, they are basically extending it by this period. They publish its reasons for so finding or as to which the self-regulatory organization consents. And it's basically an extension of 010. And a lot of people are worried about this, that it's a bad thing. But it's not, because there's a lot of moving parts in the stock market, in economics, and in the whole situation that's occurring right now with these meme stocks. This isn't something that just occurred yesterday. This is a situation that's been getting kicked down the line since before 2008 market crash. Mortgage-backed securities, credit default swaps, collateralized debt obligations, super senior synthetic shares. That's literally what they're called, super senior synthetic collateralized debt obligations. Because they've been traded and rehypothecated and moved in tranches so many times, they've had to put the words super senior synthetic in front of the word CDO to differentiate it from all the other classifications that are out there. So the commission is extending the 45-day period for the commission action on the proposed rule change. So that puts us November 10th as the date to whether they'll approve, disapprove, or institute the proceedings. If you don't know what this is, what is NSC 2021-010? It's in essence a pawn shop. And say, this might be a little complicated, and I apologize if that's the case, but let's put it this way. Let's say hedge fund A owes a lot of money. I'm sorry, no, let's put it better. Let's put hedge fund C, because I like companies that start with the letter C. Hedge fund C owes a lot of money on the stock market in derivatives losses that are still unrealized. All right. And in order to prevent the market from crashing, the NSCC and the SEC wanted to borrow some securities, some assets. You can call them stocks, you can call them shares, you can call them bonds, anything you want, except crypto, because cryptocurrency is not an asset on a bank's books. So they're basically be borrowing from this other hedge fund. Let's call them hedge fund B. I forgot if I said something else. So we're borrowing from hedge fund B in order to pay and buy back all the naked shorts, all the synthetic shares, all the FTDs, and all the shares, the legitimate shares as well, that hedge fund hedge fund C has defaulted on. So hedge fund C is now underwater, and they got margin called, and they can't meet their margin requirement. So us, the NSCC, for example, are going to go and borrow money from hedge fund B, and I'm in the form of assets. So they're going to lend me all these shares. Let's say it's $1 billion. Then our computer is going to start buying back the shares and the shorts and the naked shorts and synthetic shares that hedge fund C is underwater in. Okay, that they have to be, maybe not every single one of them, but as many as need to be bought back to bring them to where their margin position is still good, because their margin positions could be as much as 10-1 or 100-1 in crypto. In the stock market, 10-1. So you would get $100 for $100 in cash. And the banks would get $1,000 for their $100 in cash to play with on the stock market, on their margin. And when this number, their $100 that's in the stock market falls, hedge fund C, that's not worth, that $100 is now worth $75. They can no longer maintain their margin requirements with all the other new filings that have been implemented. So therefore, they've been margin called. They're not able to meet these requirements. The NSCC goes to hedge fund B, the borrower, and borrows these assets. And then with this cash, they're able to buy back. They're able to buy back everything that needs to be bought back to bring them to a margin position that is within regulation, which is reasonable. And their number reasonable is 10 to 1, 20 to 1 leverage. So they've got a lot to play with. All right. When this occurs, they're thinking that this borrowing from hedge fund B would prevent the stock market from crashing, from having hedge fund B, instead of borrowing them, instead of giving them or borrowing their assets in order to pay this off and then paying it back to them with interest after a short period of time, they've realized that they're not going to be able to do that. Because with the $190 trillion in derivatives losses by these banks, if things really go haywire with the billions of synthetic shares and ETFs and Brazilian depository receipts, BDRs and ETFs, exchange traded funds, the NSCC and DTCC $76 trillion insurance plan will not be enough to cover it, and it could potentially bankrupt them. So they're pushing this off into November because our looming government shutdown, our debt ceiling crisis, our Hurricane Ida and Hurricane Larry, our inflation, our job unemployment, our cryptocurrency issues, our infrastructure bill, our China, our Afghanistan, et cetera, all these things are compounding in September, and Congress is on fucking vacation. Congress is on vacation until September 20th. So they won't be able to start talking about this infrastructure bill at all. At all. Until after the 20th. And so this would force the NSCC to do this borrowing from these from hedge fund B to pay off for hedge fund C. But in essence, that information, those shares and those assets that they're buying back, that $1 billion, let's say, that they were buying back with it, it might not be enough. So they might now need to go to hedge fund D and borrow another $1 billion, and then to buy some more shares back. And in essence, they're trying to prevent the stock market from collapsing by borrowing assets in the form of money or shares or whatever they have to do and that's like a pawn shop, from these other hedge funds to pay off the hedge fund C, who has been margin called. But they can't do it because it's going to set off a chain reaction. It's a domino effect, with the $190 trillion being so absurd, with the number of mortgage-backed securities and CDOs and credit default swaps and equity total return swaps and futures contracts and Forex contracts to the tune of 231 days swaps, maturity dates. This is legitimate. These are IMM dates. They happen on the third Wednesday of every month of March, June, and September and December. This is the international money market. It's the euro dollar and the Forex futures contracts and options contracts. Maturity date. So now you've got these. Now you've got the other total return swaps that we've talked about in the past, where these futures contracts are being rolled over heavily right now, all the way through September 9th. Let me find my graphics real quick. Here's the GameStop futures, if you haven't seen this yet. These are equity total return swaps, and they're settled prior to the first notice day. This is the window of time in which it's gotten so small because they've been abusing this so bad since before 2008 that this window keeps getting smaller and smaller every single time that they do this rollover. And so you see here, it was a certain width, and now it's shrinking. And now you can even count the dates on the bottom, it's shrinking even more. And every time this cycle occurs, that the algorithms for Citadel are doing this buying, automatic buying and selling to try to profit and manipulate the market, it's causing the window to shrink because they're losing leverage and margin. And this is what I mean when I say that the algorithm is broken. It can't do this forever. It seems like an infinite money loop, but it's not an infinite money glitch. It's just a very long, drawn out money glitch in which they thought that they would be able to take out GameStop and AMC in the way that they took out Toys R Us and Radio Shack. All right, thanks everybody. Appreciate you hitting the bell on the subscription. I'm sorry if you didn't get that, but I am fairly positive I've been shadow banned. All my posts were taken off of Reddit as well, just today. Check this out. All of them. All my posts have been taken off of Reddit. Check this out. There's that one. And it was up for several days, getting some traction, got a bunch of awards. People were, a lot of positive feedback and some negative feedback from shills, in my opinion. But this was a guide, And the biggest complaints were people reading that was, can you condense this to 100 words at the end? I made a fucking 1 hour video. I put links and references for everything. It was literally a guide walkthrough. And people were still complaining that they didn't like the formatting or there was too much to read. And it didn't matter. It was up there for a long time. And it's been removed from AMC stock. It's been removed from DD into GME. And it's been removed from, I can't remember which other one, another subreddit. Look, this is what I got right here. You guys can read that from DD into GME, Molester McGriddle 69 on Reddit. Bro, the posts are removed. I found it earlier at work and came back now to wrote a Fat J ready to watch it. It's gone. And he's not lying. Look at what pops up every time, and every single one of them, they're all gone. The AMC stock, it's gone. See that? And it still lets you see it, but it shows you that it's missing. Looks like this one may be there. They did change this from discussion. I had a set of speculation. They changed it to tinfoil hat. The moderators did. Why? To try to discredit the post. But even still, people can see it. They can still award it. They can still give it thumbs up. All right. Reddit's not the safe place that it used to be. All right. I'll tell you that much right now. It's definitely full of shills, and I think it is partially owned by Citadel, if I remember correctly. I know a lot of apes know a lot about this. But I'm not here to rant about Reddit or YouTube or being shadow banned. Let's go to the BDRs. This others information that we got here. No, you know what? We will go back to that one. And what do we have? Yeah, there's gone. These are the Brazilian depository receipts. The custodian bank, I was talking with Hang Loose, Two Tates, Rizzo Stocks, Jimmy P, all earlier about this. I believe that the custodian banks, it pretty clearly states here, and in a long document that's in Portuguese that I can read pretty well, that I did also translate into English, that Citibank is the custodian of these banks, and they are responsible for custody of the equities. All right. Now, in my opinion, that means they have to buy and maintain custody. Some people believe that it means that they just have to hold them for the depository bank, but it doesn't matter because we know who that is, and that's B3, Banco do Brasil, and that's for A2MC34, the stock ticker in Brazil that is 100% synthetic shares. All right. John Merriweather from AMC has told us they have 513 million Class A stock. It appears that the Brazilian Stock Exchange added the ability for Brazilian investors to trade unsponsored BDRs, Brazilian Depository Receipts. These are not shares. They are certificates, and there's a 6-to-1 ratio of them. Under the symbol A2MC34, BDR certificates representing shares of foreign companies traded in Brazil. In this case, AMC are already legally issued. All the shares for AMC are already legally issued, outstanding, and currently traded on the U.S. and blocked in the account of the program's custodian institution. He's telling us that all these are legally and properly blocked in the account of the program's custodian institution here in the United States. That's what the vice president of John Merriweather of AMC is telling us. And he's telling us that these BDRs in A2MC34 are unsponsored by AMC. We have no involvement, and more information can be found here. That's the Banco do Brasil information I was telling you about BDRs. All right. The difference in outstanding shares as reported on the Brazilian exchange is a conversion rate calculation. So there are 6 BDRs for every 1 share. That's why there's 3.08 billion market cap of certificates of BDRs for A2MC34 listed on the exchange in Brazil. And that's for every one of those, Citibank has to maintain 1 share. That's around 513 million. So if the retail owns 80% of the float and institutions also own 45% of the float as reported by FINRA today, and Citibank owns 100% of the float supposedly, which they don't. They only own 61,400 shares of AMC. They still have to buy back those other 513 million. So that means they've got to buy back the entire float in synthetic shares alone. Adam Aaron has confirmed 513 million legally issued shares. Precisely 0 new shares have been issued. This is the asshole who's in charge of the Commodities Futures Trading Commission, the CFTC. This guy's a motherfucking crook, probably, allegedly. Yeah, I think he's taking bribes, allegedly. I don't know. I have no proof whatsoever. And he was appointed to be the new head of the CFTC, even though he already worked for the CFTC previously in a different role. He was appointed to be the new chief of staff, the new head there, by Joe Biden and the Biden administration on January 21st. And this asshole, Heath Tarbert, this piece of shit, after he left the CFTC, immediately after, April 6th, he went to go work for fucking Citadel. This piece of shit works for Citadel now. He used to work with this piece of shit at the CFTC. Now this piece of shit's in charge, and this guy's over at Citadel. I don't know. You tell me what you think's going on. Now I keep running through this because we've got so many moving parts. That's an example of one out of many things that we are seeing. When you take a look at this rule change and think that this pawn shop is going to make the NSCC hold a bag of garbage, or get or borrow money and have to pay it back and buy back a bunch of shares, another hedge fund and bank is going to become margin call, or they're going to become underwater, and their prime broker is going to margin call them if the SEC or NSCC don't. Or the DTCC, I should have said, not the SEC. Disregard that. So these cats are then going to cause a domino reaction. They're going to have to go to the next and to the next. And every one of these hedge funds and market makers and banks is going to be the first one to buy, is going to want to be the first one to buy. They don't want to be the last one. All of them. So they're going to have a domino effect, a fire sale, in essence. And they say in the movie Margin Call, it sure is a hell of a lot easier to just be first. It really is. I think Jeremy Irons said that or something like that. And they all want to be the first ones to bounce out of there. So to prevent the fire sale, the government was going to do this. The NSCC, they're not the government, my bad. NSCC and DTCC are regulatory bodies, as is the SEC. And they work for the government, under the government. But they're doing crooked shit like this. Okay? And here's the statement from Banco de Brasil, B3, for AMC Entertainment Holdings, which they're not associated because this is an unsponsored BDR, for ticker symbol A2MC34 on the Brazilian exchange, CVM registered. What does that say down there? Identificação do custodian identification. CITIBANK, based out of New York. That's our guys. They're the ones that are supposed to maintain these shares on hand. A BDR is a negotiable instrument that represents an ownership interest. And it must be backed by its own securities, which is AMC, listed in its home or other markets, which is AMC in America, because it's the only market that it exists in, Leawood, Kansas. But BDRs are quoted and traded in Brazilian reals. And that's why there's a 6-to-1 exchange rate. Because there's, I'll stop there. No more detail on that. As the securities underlying the BDRs, the shares that back the certificates, must be deposited with institutions that are in countries which have signed agreements with the Brazilian Securities Commission, the CVM, or have signed a memorandum of understanding. So even if Citibank does hold these and they can legally hold them, say, in Luxembourg, it doesn't make a fucking difference because retail owns the float. And then institutions also own a large portion of the float, which already equals over 100%. But now you're telling me that Citibank owns another $513 million to back these A2MC34 BDRs? If they don't, they got to buy back $513 million right there. And I showed you about the ETFs on the last one as well. Citadel used to work for CFTC with this fucker. Now this fucker is in charge of the CFTC, and Biden gave him the appointed position. They regulate the U.S. derivatives markets, not the SEC, that are outside of the United States. So that includes future swaps. So these guys are the ones that allowed these futures to occur and get rolled over since 2008. All right? And take a look at the width of these. They're getting smaller. Each one is losing days and getting narrower and narrower. You see that? And as we continue, it's going to continue to shrink. But this is where the point of no return has happened. Because if they were to go ahead and go forward with this and start this pawn shop, the NSCC would get caught holding a gigantic bag of trash, shares, and assets, while the other hedge funds go first and market makers and banks and sell off all their shares, leaving the SEC and the DTC and the NSCC holding the bag and forcing their insurance to pay for it. This is not a bad thing that this has been pushed back. They know that we are having debt ceiling issues. They know. They know that we are having a government shutdown looming on October 1st, the beginning of the fiscal year for the government. They understand that we have a hurricane that just hit and FEMA needs to be paid to help Americans. Okay? They know this shit. Where the hell did this go? Yeah, see, they deleted all sorts of my shit. Excuse me one second. I'm sorry about ranting. I'm just trying to pull something up for you guys. So they don't want to be caught with this problem. All right? They've got 3-month Treasury bills back in 2011. They thought that today would be worth 4.4% return. They're actually worth 0.01 to 0.06. And in the 2020 market crash, they were worth negative 0.05. In 2011, they predicted 10-year notes to be 5.4%, and they're at 1.25. They're at 1.25. What a joke. Would you invest your money for 10 years for a 1.24 yield? That won't even account for inflation. Sorry if I'm falling behind on the chat, guys. It's such a complicated topic that I didn't want to get off the topic, because if I forget where I am, I'm just flying by the seat of my pants, and I don't want to leave things out because I know this information. I've been doing thousands of hours of due diligence with the entire community, and I know what the hell's going on to a certain extent, and I don't want to leave anything out for you. So again, I said it was going to be a short video, but here we are 43 minutes later. So I apologize if it's a little long. This goes to show you just how bad our shape is in, the state of our economy and our savings, the true shape of our savings. Personal savings was $1.97 trillion in the second quarter, but it was $4 trillion in the first quarter. Americans lost $2 trillion in one quarter. Personal expenses have gone up by $680 billion in Q2 and $540 billion in Q1 because we are in a record-setting hyperinflation, in my opinion. We have been at 5.4% for the last 3 months in a row, and 2 months in a row, and we've been at the same 4 months are looked identical to 2008 inflation. All of our expenses have gone up $150 billion as Americans. That means everybody that's an adult listening to this, on average, has to pay $700 more a month, $717 more a month to be, a month to be exact, to live the same lifestyle now that you did 3 months ago. Okay? So I won't get into how bad our GDP is, but they know how bad our GDP is. They know that exports are down, that imports are down, residential investment slowed, slowdown in equipment investment slowed. There's downturns in private inventory investment, upturns in state and local government spending, downturns in investment and structures, and the list goes on. The entire GDP almost is related strictly to this government and spending on stimulus payments to Americans and COVID-19 spending, as well as Americans spending their stimulus money on used cars and takeout. Those are the top 2 and top 3 contributors to the nation's GDP. Where is my girl, Janet Yellen? Old Yeller. Currently, 9 states have an unemployment rate of over 7%, and some of them as high as 8% almost. That's not great. They say that their rates were lower in 7 states. Unemployment rates were lower, yeah, in 7 states. You know, they were higher in 30 states and stable in 40 states. That means that they have not gotten better for the majority. So even though they claim it was 5.2 percentage points lower than in June 2020, that doesn't mean shit, because in June 2020, everybody was sitting at home. Now everybody's just jobless. You guys know about our eviction moratorium? Oh, here's old Yeller. They thought, SIBO projected that they would run out of money in October or November. Janet Yellen and SIBO have told us that the timing and size of revenue collections and outlays over the coming months could differ noticeably from SIBO projections. How could they differ noticeably? Like this, right? This is how they could differ noticeably. Around the country, Louisiana, New York, New Jersey, from the south to the top northeast of our country is devastated. And it's a big country. You could fit Europe many, many times over inside America. Okay, this FEMA spending, the amount of money that it's going to take to clean this up, and I'm going to go on Twitter and show you something that somebody sent me, but I'm going to do it over here on the other screen real quick to do it privately, because I do not want to, give away any of their other information. They sent me some pictures and whatnot of what was going on in their home area. I'll see if I can find it real quick. Reverse repurchase is over $1 trillion for 17 days in a row. Banks are not putting their money in these junk bonds, these mutual funds. These junk bonds, 3-month bonds from the government, because they know that they're going to go negative as soon as the stock market crashes. Out of the eviction moratorium money, that $90 billion that's included in our country's fake GDP, only 6% of it, under $5 billion, was actually dispersed to tenants. And those tenants didn't technically have to pay their landlords. So do you think they paid their landlords? Do you think the landlords got that money to pay their mortgages on their investment homes? Probably not. They're probably paying 2, 4, 10 mortgages right now. How long can they sustain that before bankruptcy? While companies like BlackRock are coming in and scooping up real estate and putting it in LLCs and renting it out to Americans at a massive premium because their 7-year moratorium that they applied for renting, and the 7-year bankruptcy that's on the homeowner's credit rating are going to prevent both the homeowner and the tenant from buying a fucking house. So they're both going to be renting with terrible credit from property management companies, and they're going to be paying a gigantic premium with something akin, very similar to the way that companies are making drunk drivers pay insurance for SR22 to allow, because they're high risk for insurance. It's going to be the same thing for your mortgage. You're going to be paying SR23 insurance in order to get an apartment because you got shit credit because you applied for a rent moratorium or because you went bankrupt and lost your home.